I'm Helen and I'm a VAT Senior Manager here at Parry, and I lead on our VAT and indirect tax offering to all of our academy clients and also other education providers, some other schools, universities. Background on myself, so I've been at Parry coming up to 4 years now, and prior to that I was one of the big four firms for 6 years and originally started out as a tax solicitor. So what that does mean is that I've worked with academies and education providers my entire career, but from a slightly different angle each time. So I've seen a variety of different ways in which VAT can impact on those in your own sector. So the topic of my presentation today is common VAT pitfalls for academy schools. I've picked a handful of issues which I've seen clients either struggle with, where they've reached out to seek advice from ourselves, or where they've had some particular attention or scrutiny from HMRC, where they may have had it wrong, and then the impact of that has come back to bite them. So just run briefly through the agenda of the 6 items that I've chosen. They're not in any particular order, other than I might have grouped a few items together that flow into each other, but all of them are worthy of discussion in some way, because like I say, I've seen most of these trip people up at some point or another. So starting off with the importance of an academy needing to identify the difference between their business and their non-business activity. So first of all, why is it important to do this? Well, it's quite critical that academies understand the difference between them. So firstly, is because you need to understand your position in relation to the mandatory VAT registration threshold. So as it stands, that threshold is £85,000 per annum. So if you have taxable business supplies over that threshold, then you must be VAT registered. It is possible to be registered on a voluntary basis, either where you've not hit that registration threshold or where maybe you at one point were but have fallen below it. You can choose to deregister, or you can stay registered on a voluntary basis. Once you are then VAT registered, VAT must be charged on all taxable business supplies that you make. Now, it has a knock-on effect in that VAT recovery becomes allowable on those taxable activities, but it's not allowable on anything that you make which is a business supply but is VAT exempt. So one example of that could be childcare vouchers. And we did see a few years ago, it never materialised into what we thought it might do, but a number of non-registered academies who use the Form 126 method to recover VAT on non-business expenditure, they started to receive kind of nudge letters from HMRC saying, just a reminder, there are certain business supplies that you may be making which are exempt, and you should be performing a restriction against your input tax. I think quite a few academies do trip themselves up on this, assuming that they can have blanket VAT recovery if they're not registered. And we did think that that letter might be the precursor to a more kind of focused approach, maybe some visits or inquiries kicking off. We haven't seen that, and that might just be a case of HMRC capacity. But the fact that those letters were sent out, if anyone recalls receiving one, you would be in a worse position if it were ever caught later for HMRC to say, well, we did warn you, you had this letter and you're still getting it wrong. So just maybe something to be aware of if you're non-registered. Are you fully aware of whether you have any business activity which is exempt that may have an impact on whether you should be recovering all of your input tax or not? So the reason why you are allowed to recover VAT even if you're not registered through a Form 126, or if you are registered even though it may be a non-business activity, is because of a special regime in the VAT Act. Normally, if any of you have ever worked kind of in the non-educational academy sector, mainstream businesses can only recover VAT on business activity, and non-business activity would need to be blocked. The government allows this special regime to say, yes, you as an academy school who as a general point of principle are educating children for free in return for your grant funding, you can still recover the VAT on that. And that special regime can either be used through the Form 126 or through your VAT registration. but it is only recoverable on non-business activity or taxable business activity where you're registered. If you have a mixture of both, you do need to be making an apportionment to identify the costs which relate to those non-business activities, but any costs relating to business, you then need to take a decision on, are you recovering that appropriately because you're registered or not. So as an example of what I mean by what is a non-business activity in the context of your sector, the first main one, of course, is education activities, so teaching the children in return for your central government funding. That one is clearly a non-business activity and there's no requirement to account for output VAT tax on the government grant funding. An extension of that, we then have other activities which are closely related to education, but which aren't the sort of core teaching of the children. There are 3 extra requirements, though, to get something into the camp of being closely related to education and still, by extension, non-business. So the first one is that it must be provided at or below cost price. The supply must be made directly to the pupil itself, and it must be necessary for the delivery of education to that pupil. So examples would include the provision of school meals to the pupil, any income received from running a breakfast club or an after-school club, or costs or charges levied for educational trips. Any income that you do derive from those 3 examples is generally treated as being outside the scope of VAT and you don't need to charge. But like I say, just going to find an example of something I just want to bring your attention to. One thing I have seen a couple of academies start to consider is around the school meals. I do have a section later on school meals, but I'm going to include this bit now. With the stretch and the pressures on funding that we're seeing, 1 or 2 academies have started to say, well, what if we put up school meal prices just a smidge with an expectation of trying to get maybe a profit margin on those? And that came with a very big word of warning, at least from myself. Sure, there might have been other factors why it might not be advisable, is because you risk breaching that first requirement there. If you're intending to make an element of profit on a pupil meal, you're not doing so at or below cost. And so you risk losing your entitlement to treat those meals as outside the scope of VAT, and you risk bringing those meals into the realms of needing to charge VAT. So very big word of warning on anyone thinking about that.
What can include as your costs for that? So could you, for example, for us at the moment, this is an area I want to look at because at the moment we make a loss on especially in secondary school. But so obviously you've got the costs of our in-house catering team and all their on costs, obviously the food. Can you include things like apportionment of your energy supplies that you think you might be incurring as doing the cooking? Maybe it's some sort of admin fee for... that would all be... Anything
kind of reasonably attributable to the running of the canteen. Yes, maybe the allocation of these dinner lady salaries. Like I say, I think the energy cost is a very good example. Running the kitchens is going to suck power out of the central school fund. So it's showing that you've done the calculations to at least have a feel for what your cost base is, to then be able to say, well, we feel this is our cost and this is where our price is. If you've not got that data or that information, you're immediately on the back foot if HMRC started to ask that question. But yes, I think there's definitely a good argument for saying there can be various costs that can be kind of baked into that cost base. So in terms of typical business activities that academy schools tend to operate on a fairly typical basis, third-party lettings of sports or other space within the building, sales of any of the goods and services I mentioned on the previous slide, but where they're done at a profit, so the school meals, breakfast and after school club. I've had very similar discussions to the question you just asked around how do we work out our cost base for the breakfast or the after school club to check whether we are generating a profit or not. The slides will be circulated later, so don't worry about having to catch everything. Catering provided to staff or visitors, which is covered on the next slide. and sales of uniform, which again I've got a separate slide on later. So business activities may then be taxable or exempt from VAT depending on the nature of the activity itself. So you do need to, once you've worked out question number 1 of is this business income, this kind of additional to the basic teaching of the children, your next question is then what is the VAT liability of what we're doing to know whether you actually need to charge or not. So moving on, I'll now cover the supply of school meals. And where a school supplies the meals, and I'm assuming here that we're talking about the school itself as the provider, as opposed to a fully outsourced catering provision where the caterer is deemed to be the supplier. Where the meals are supplied to the student at or below cost, they are deemed to be closely related to education, and so no VAT needs to be charged. But that only extends to meals to the pupil. Any meals are supplied to either staff or visitors, or perhaps students visiting in from another education establishment. They don't fall into this category. It's a business activity and it's a taxable supply. So you've got VAT registration and compliance implications to bear in mind. I often see schools that aren't necessarily on top of this, especially the non-registered ones, because they don't have to charge VAT on the meals while ever they're not registered. But what you should be doing is monitoring the extent of non-qualifying meals and making sure that's taken into account in understanding whereabouts you are on that annual 85k threshold. Linked in closely to meals is now the actual catering contract between the academy and the catering provider. There's a number of different contractual models that may exist, but the most common two are up on the screen now. So firstly, we can have an agreement where the catering contractor is acting as the principal. So it's been fully outsourced to the caterer and they are the seller of that food. Because the caterer is the principal provider rather than the school, then the rules about it being a closely related to education supply can't apply. The contractor's acting independently from the school, and so it's no different from a caterer in a private shop down the road. They have to charge VAT on the meals to the students in exactly the same way as charging them to the teachers or visitors. Contrast that with where you have a catering contract where it's been set up that the contractor is only acting as an agent of the school. Here, the school is the supplier of the meal, and so you can use the closely related to education rules to make it outside the scope of VAT. Separately to the supply between the school and the pupil is a transaction between the caterer and the school. And the service provided, it's the other way around, the service provided to the school by the caterer is a taxable supply. Any VAT charged by the caterer for the running of the school kitchen is taxable, and so there will be VAT added on to that. But generally we would expect academy schools to be able to recover the VAT on that. Ignore that last point. I've run similar slides before to both academies and independent schools.
Sorry, what defines the I don't know if I'm missing it. What defines the difference? How do you understand which one you are?
It's to do with the exact terms of the contract. So what I was just about to say was that the contract and the reality need to match. So we've had a client a few years ago that had got particular paperwork, particular contracts drawn up by lawyers, say, I can't remember which way around it was, but saying it was one way, but the reality of the practice and the way the recharging went and the money's changing hands was actually the other. So you do need to make sure that they match up. But generally in a true agent scenario, it would be the case that it's expressly in black and white that the contracting company is only an agent of the school. All the income charged from meals directly goes into the school kind of coffers, with a payment then made to the caterer for the running of the catering, but the income from the meal is not the caterer's. Does that help? Or?
Yeah.
We can speak in the Q&A section or the panel later.
Difficulty on that one, Helen. We've got one client where the agreement refers to both.
Right.
I think I can't quite remember off the top of my head, but I think it was saying that the caterer is the principal in the production of the meal.
Yes.
And then it said that the caterer was the agent in the provision of the meal.
Mm-hmm. So that's probably not one of these two examples.
No,
it's probably one of the extras that we occasionally see, where it
yeah.
could be a bit of a hybrid scenario.
Yeah.
So yeah, even more important to understand exactly what that is saying as to then what that means from a VAT point of view for both the school and the caterer.
Yeah, and the way that in that scenario, I think the way the caterer was then dealing with it from a VAT point of view is it was all kind of sitting, the VAT treatment was kind of following it, the route of them being the agent.
Mm-hmm.
But we was kind of not sure the agreement really reflects that.
Yeah, and like I say, we do see scenarios where the paperwork doesn't match the commercial reality. So we had one client that they treated themselves as if they were acting as agents, so they were not charging VAT on meals, but the paperwork said they were principal. So if HMRC would have come in and done a review, there was a risk there as to, well, which one do they follow? They're supposed to follow the commercial reality, but at a glance they would see the paperwork and go, well, you should be charging VAT. So it's important to get a hold over these kind of things. Turning next to expenditure on construction work, and the kind of things I'm thinking are things like, say, new sports facilities, theatres, dance halls, or possibly even a new school outright, very big projects like that. Construction work on buildings is generally standard rated for VAT, so VAT will be charged at 20% by your builder. But there is an ability for academy schools to buy in certain construction work at the zero rate in the right circumstances. So construction work can be zero rated if there is a construction of a new building, so not an extension, and that building is going to be used solely for a relevant charitable purpose, which means using it for a non-business purpose. Now, if a building is being used entirely for the grant-funded education and nothing else, then generally that would probably qualify for zero rating. But often we see that academies don't just use their buildings themselves. They will look to make lettings income in the evenings or weekends. And that can have a problem on whether you hit that solely definition or not. HMRC accept that solely does have an allowance in there for some elements of business use. They say 95% is the appropriate test. That can be assessed by a number of measures, and it's up to you as the academy to choose the most fair and reasonable measure for you. Often we see time, so the number of hours that the building is actually physically in use over a week. How many hours are school use? How many hours are third-party use? And if that 95% test isn't met, then it's very unlikely, if not impossible, to have the ability to zero rate the construction cost. Now, obviously that adds cash flow burdens, and it adds into the question then of, can that VAT that you've spent on building this new facility be recoverable in full or not? Turning back then to my comments at the start of the presentation about, yes, you can recover VAT that relates to non-business activity, but if there are pockets of business activity and business income, then again you need to take that into consideration. So with construction projects, usually we're dealing with big numbers. You then add 20% on top of that, the numbers are getting even bigger. So I would always advise that if you are looking to undertake some significant building work, think about VAT as early as possible, because the earlier it is factored in, the better certainty you have over budget, knowing how much this project is likely to cost you over the long run, and making sure there's no surprises further down the line when it may be too difficult to make any changes. Connected to the construction of new facilities is then the letting potentially of those facilities. The VAT treatment relating to leasing of school assets is wide-ranging and complex. and it depends on a number of factors as to exactly what kind of letting we're talking about. So important factors may be, what is the nature of the space being provided? For example, is it an empty classroom? Is it a specialist room with a number of equipment in it? So for example, a drama theatre with lights, sound, staging, tech suite with the computers and the similar facilities within that, the IT suite, or a sports facility. All of these have slightly different treatments depending on what the nature of the room or space is. It's also important to understand the status of the customer. So the person hiring that space, you need to understand, are they an individual? Are they a corporate body? Are they a club or an association, like say the Scouts or a football team? And then also as an academy, you have the ability to exercise an option to tax over your building and space. An option to tax, if you're not familiar with it, is where you choose to say we want to charge VAT when we supply land or buildings. The default treatment of most land and buildings when supplied is that it is VAT exempt. So turning back to that very first slide, yes, you may be making lettings income from renting out your building, but if you've not exercised an option to tax and it's not certain sporting facilities, it's most likely going to be VAT exempt. So again, that needs to be taken into consideration in understanding your input VAT recovery position because of the exempt income that you would now make. Third-party usage may also have implications on VAT reliefs that you may have previously undertaken. So as an example, if you built something a few years ago and at that point in time believed that you would be over the 95% test, very, very minimal lettings planned, and you did have zero rating on those build costs, if things change further down the line, and we're generally talking about a 10-year window between completion of the new build and when this window ends, if you have a significant uptick in the amount of VAT exempt income and third-party usage, it can actually lead to a clawback of some of the VAT relief that you obtained at the outset. So again, very important to kind of have an understanding of what extent of lettings you are doing, hopefully as early as possible on, say, a new build. But if things do change further down and it's seen that you want to further exploit your letting space, take that into consideration as to, are we going to create a problem, or at least being aware of the clawback to build it into your budgeting. And then my final sort of pitfall or area of risk that I thought was worthy of discussion today was sales of school uniform. So I think I mentioned in the previous slide that the sale of school uniform is always considered to be a business activity and business income, and therefore taxable. So again, there's VAT registration points with that. You need to be including that if you're not registered, ticking it up on your sort of tracker of how much income you're making to see whether you get to 85,000 or not. Now, the trickier point comes around, do you actually need to charge VAT on the sale of the clothes or not? You're probably aware that zero rating can apply to children's clothes, but it's not quite as simple as that because the definition of children's clothes has some nuances in it. The legislation says that if it is an article of clothing or footwear, if it's not made of fur, and if it's designed for young children and is only suitable for young children, then it can be zero rated. The difficulty comes in that there isn't really a definition, at least not in the legislation, of what is a young child. There's a variety of measures that HMRC use, including both the clothing size itself and the age. A general guide is that HMRC kind of accept that children up to 14 meet the definition of a young child. If you're a primary school, you're probably okay because of that. But if you're a secondary, children from 11 up to 18, you're going to have clothing that you're selling that's going to span both sides of this definition. So it's something to be aware of. I remember getting a question off the back of one of these talks a couple of years ago about school ties. And I think they've got a new contract where it was going to be a kind of one size fits all. So then they were saying, well, where do we stand? Can we treat this as being a young children's time and so zero rate it, or because we know that certain older children are going to buy it, do we have to charge VAT on that or not? So it can be a little bit of an unexpected minefield around uniform. So that was all I had on my slides around VAT today. Happy to shall we have time for questions? Or?
Yeah.
Okay, if you have got any questions, keep them in mind, and I'm around for the Q&A panel, and I'll hand over to Glenn, sorry.